Traders, welcome to another price action trading lesson. Today was FOMC announcement day, which means price action tends to be very slow prior to announcement, and after the announcement, the volatility increases. You want to make sure you stop trading, let's say, hour before the FOMC because everyone is waiting for the announcement. And after news come out, you want to make sure to let price action cool off a bit, let's say for 10-20 minutes, because the volatility increases a lot. The bars are very big and you don't want to be taking a setup when the bars are so big that your stop loss is larger than normal. But let's talk about today's price action, how to follow the price action, how to read the price chart just relying on pure candles and price action rules. We can see that we have a trend line structure. We have a lot of price swings swinging up and down. The supportive indicator, the 2mm bar EMA, is completely flat, but we traded up into this trend range. At this point, what I can see that the downtrend is attempting to create new low. It's failing and we have massive push above EMA, which is indicating to me that the bias right now is getting more bullish because we traded up into this trend range and sellers are failing to create new extreme. However, we can see that this is completely cluttered. This is so much overlap, EMA in all these bars. So I'm not even thinking about taking a setup in this consolidation. My goal is to take a nice high probability setup, and this is too congested, so I'm not even going to be touching this. I'm just going to price action, let do its thing. We're breaking out of this trend range. Since this move is quite strong, I'm going to locate a channel because these candles are always part of a channel, and we can see that we have overshoot. Now this is overbought territory. I don't need any indicator. I can see how the price action is reacting. We are breaking the trend channel line. We are so far away from the EMA, which EMA acts as a magnet, and prices will pull closer to it. So this right here is overshoot, and this is not a strong uptrend. Your goal is not to look for a wide channel like this. This is not how price action works. Okay, this is too wide, and how can you tell? When the move resembles more the larger two-legged pullback, you're following the two-legged pullback, and you can see we have a first leg, consolidation, and the second leg. The measured move is almost reached. So the moves in price action are a lot of times measured, and this is one of the tools that you can use as a price action trader trying to measure the move. So at this point, we're expecting for price action to at least break the uptrend. Okay, and we're pushing below. Okay, so as prices are trending lower, what am I expecting? Well, I'm combining overshoot, which can even reverse the market sometimes, with the two-legged pullback, and this was trend range structure. Since this is a trend range structure, I'm not expecting for prices to continue working higher, especially after overshoot and especially after larger two-legged pullback. Okay, so everything right now is telling me that the bullish bias depleted and I am leaning more bearish. However, there is not really a great setup for me to sell. So I'm going to draw a channel like this, and notice what we have. We have a new low, first entry short, pullback, second entry short. So this is a two-legged pullback off the EMA, decent signal bar, but notice how congested it is. This is very aggressive. If you're going to take it, I only have to mark it as aggressive, definitely not a textbook setup. The context-wise, the setup makes sense because we have overshoot. The downtrend is confirmed. You expect new low. But notice we have 8 bars stacked right next to each other. New low, first entry short, pullback, second entry short. And since this is a trend range, most breakouts will fail. So you're leaning more bearish. But this was too congested. Not really a fan of this. Okay, prices are correcting. I'm going to redraw the uptrend because I want to follow the trend line rule. And as I'm watching this, I'm not thinking about buying just yet, because there's also a possibility for me to widen the channel just a little bit. And notice I'm still getting 2 swing confirmation and 3 swing confirmation. So since it is so close for me to widen it and still get price action that is not really distorted too much, I'm gonna select this channel, because after the two-legged pullback, we're expecting for prices to go back into trend range, and we're most likely not going to reverse bullish in the middle of no man's land. So let's see what's going to happen. We have another overshoot. Okay, and prices are breaking lower. So at this point, I'm expecting failed second entry long. Can we get it? And we cannot get a failed second entry long. We form new extreme, and you can see I'm following the trend line rule. By the way, the prices may not get new extreme for the uptrend like here, and that is okay. Overshoot can sometimes even straight up reverse the market. Okay, you expect stronger momentum in opposite direction. Just like here, we have overshoot that leads to a break. This is how channels work in price action. Okay, we're working lower, and notice how far lower we're working. So we are very close to low today, and this is way too bearish. From the very top, we keep, for the most part, getting rejected by the EMA. So as I'm watching this, notice we are all the way to the very low of the day. This looks way too bearish, and I want to find a little wider pattern because this second leg is too strong for just this tiny pattern. So at first I was looking for something like this, wide downtrend like this, but there's also a possibility for me to draw, let's say, downtrend something like this that fits also pretty well. Now, doesn't really matter which channel you use because sometimes you just have to be close, but you have to remember that the bias is still bearish. You can see how EMA is getting rejected, and I'm expecting still for this bearish bias to continue. Okay, it's getting rejected off the potential trend line. I have a new low, first entry short, pullback, second entry short. So you have two-legged pullback at the key entry point, decent signal bar. So this is a high probability setup, second entry short. When I was watching this, I was a little bit patient and notice what happened. It was forming a lower high, but also from the highs felt second entry low because this was the significant moment. We pull back to the EMA, pull back to the trend line, so I can reset the count here. So the bias is bearish, and we have new high, first entry long, pull back, second entry long failure. EMA got rejected here, and for the second time here, and this is a great signal bar. And notice how many bulls must have gotten trapped going along directly into EMA. So this is a textbook high probability setup. I wanted to take this setup myself, but unfortunately, for those of you who were trading today, you know how fast this was. You had to use a stop order, limit order, never came back. But two high probability setups, and that's the goal as a price action trader. Your goal is to identify context, key entry point, and only wait for the high probability setups. So great two setups back to back. Okay, we are pulling lower. You don't want to be selling directly into low of the day, far away from key entry point. At the same time, you don't want to be buying because the downtrend is in play. I'm going to redraw the uptrend. Okay, we have a break and new extreme. At this point, I'm still leaning more bearish because the downtrend needs to get new extreme. But remember, you are at the low of the day. And what do I mean low of the day? Notice this was the opening of today's session, and this is the lowest low during the pre-market structure. This is the low of the day. And this structure, how would you characterize it? It's clearly a trend range. We can see big move up and big move down. So this is not a strong trend in either direction. So you can expect stronger reaction around the low of the day. But I don't want to keep buying just yet because the downtrend is in play. I'm just waiting for push below EMA and possibly lower high or for second entry long. But notice it's not happening. And we keep working higher. Okay. So at this point, I need to adapt to the structure. We are failing to get the new extreme. And sometimes it's not uncommon for market to not get new extreme in trend ranges because in trend ranges, there is so many buyers buying the low. There's not enough sellers for a new low to be tested, but you don't want to be buying too quickly because 8 or 9 times out of 10, there's still going to be the low tested. So I'm just following the price action. We have a little overshoot, so I'm going to be patient. And the uptrend keeps continuing. Another overshoot, so that means I need to widen my uptrend a little bit. And as you can see, we are coming to news being announced within 1 hour, so you don't want to be taking a setup because it's getting too slow. So at this point, I'm gonna fast forward a little bit. Okay, and you can see this is the FOMC announcement, very volatile. So you want to make sure you're not taking a setup around this area. And I'm gonna mark my resistance because this is a trend range. Now, even though the news can distort the price action, the price action rules still apply. So since this is a big trend range, you expect for prices to go from the bottom all the way to the top. And notice this channel that is nicely confirmed had a close outside and moved to the new extreme. So prices form new high. So what are you expecting? Push back into this trend range because uptrend played out and this is overall a trend range structure. But you don't want to be trading this at all. This is just exercise for us to read the price action because the bars are big. This is happening all so fast. So we're just watching the price action. We have a break and a new extreme. So I'm going to mark my new extreme. Okay, I'm still patient because this is still right after the news. So don't even attempt to be guessing, taking a setup. You can get whipsawed. You can give back a lot of your profits. So I'm just going to fast forward this a little bit. This is still quite volatile. Okay, but this is still looking too rangy. When you are struggling to find a trend, you're most likely trading some form of range, and prices are finally trending all the way down. Okay, so prices form a break and a new extreme again without a setup, and we're slowly thinking about taking setups. But today, I'll be honest with you, the price action was very volatile. Basically, to the very end of the day, it was very hard to find a setup because the bars were big, it was moving too fast. Sometimes after FOMC, it will go back to normal fairly quickly, but today it was still quite volatile. But notice you're bouncing at the low of the day support again, which means what are you expecting? Strong bullish reaction. You can see, lo and behold, the price action is really working higher. You're at the resistance, but remember, in trend ranges, the trend line rules still apply. So we have a big spike up, and this trend still needs to get new extreme after break of a channel. Okay, and we have a new high right here. So I'm gonna mark it, new extreme, no way for me to enter. No pullback close enough to the EMA. I can't really sell, no good setup here, this was too steep. You have a new high, first entry long, so what are you expecting? Most breakouts of trend ranges will fail. You have a break new extreme, uptrend played out. You're counting from the highs, first entry long, so we are expecting a failed second entry long back into trend range according to price action rules. But that never formed. You can see prices working all the way down without a good setup. What am I expecting at this point? Remember, we are at the upper portion of the trend range, so the bias is bearish, and this downtrend is still in play and needs to get new extreme. So my goal is to lean more bearish. I have a new low, first entry short, second entry short at the highs would be great. And we have a new low, first entry short, pull back, second entry short. Great signal bar, high probability setup. The bar was extremely big, so you know, if you're trading this, you want to definitely scale down, trade less contracts, or just mark it as a hypothetical trade because the market is very volatile. But hopefully you can see why this is a high probability setup. You're coming after failed breakout, the downtrend is in play, and according to trendline rules, you expect new low. Notice all these trends are following the trendline rule. Second entry short created a profitable scalp, and notice we are bouncing at the bottom of the trend range again, at the support. And just like at the very beginning, we use the measured move. We have first leg down, break, second leg down. So there's a reason to price movement. Decent setup for you to take a chance, but definitely more aggressive. You're buying bottom. It's okay to pick a bottom in trend ranges, but there was no high low or failed second entry short. Market is working higher. Okay, we have brand new spike working higher. So what are you expecting? The same thing as you were expecting right here. After break, you expect for prices to create new extreme. So you have a spike up. We're closing outside. This is just a high low, which we cannot take because we have moved so far up. So what am I expecting? We have a new high, first entry long. So if we get a second entry long, it would have also been counting from the low, failed second entry short. Two high probability setups in one. And notice, new high, first entry long, second entry long, new low, first entry short, pull back, second entry short failure. We have two high probability setups in one. That adds more confidence. The uptrend needs to get new high, and you're bouncing off the bottom. So you're expecting for prices to reach the resistance and to create the new extreme for the uptrend. So the context is in your favor. The bias is bullish. The new high has been made. So you're pausing your long setups. You're at the top of the trend. You can see how healthy this trend range is. Now, healthy trend range means there is no imbalance, which means the support and the resistance is tested regularly. And this is important because if there is imbalance, which means there's a series of higher lows or lower highs, the breakout can succeed. But if the range is healthy and you have deep swings up and down so consistently, you expect swift pivot, and you really expect upon reaching the lows or the top for market to pivot and go to the opposite side. So for this reason, I'm not really expecting any wider channel. So the healthier the range is, you can lean more towards tight channels. And if something resembles the two-legged pullback, you generally are satisfied with it. So you have a two-legged pullback up. The downtrend is working lower. You're coming off the resistance, so the downtrend needs to get new low. But you're above EMA. I can't really sell. Okay, we have new extreme again. Another two-legged pullback. We can see how the market likes to move in pairs of twos. Okay, we have a new high, first entry long. We're back into this trend range. We have a lower high, but I don't think you want to take it. It didn't form that well. However, if you get a full second entry long somewhere around here, that would have been great. And you can see how perfectly trend range is being traded. Now, this is not a bad setup because I like these kind of failed breakouts. It's a shame it didn't take higher because it is too sideways. This is what you want to see. You want to see one leg. The broader it is, the more you like the failed breakout. Okay, I don't like fading breakouts like this when it looks visually like a part of one move, one leg up. But if it's broad like this, you have one steep leg, consolidation, second steep leg. This is a great bearish depletion, and this is where the breakout a lot of times will fail. But the signal bar didn't really take higher above this bar, a little bit of inside bar. Okay, prices are working lower. We have a break in extreme, so I'm going to be careful. But notice all the way from the top to the bottom, not a single confirmation of the EMA. So the structure is very bearish. I don't want to keep buying because right now this is looking like a one steep leg down, not a single confirmation of the EMA. So this is telling that the bias is changing. Normally in the range we had a two-legged variations of moves, and now we have big move down. Prices are correcting. I'm going to redraw the uptrend. You have a little close outside, little move to a new extreme, and notice the support is right now acting as a resistance. It is the breakout area that was tested again. I can't take second entry short because we just had a break at a new extreme, but notice we have lower high, confirmation of the second entry short, new low, the first entry short, pull back, second entry short. The low today is acting as a resistance, strong push below EMA, and a great bull trap, lower high, confirmation of the second entry long, because now we can take a short setup even after new extreme because it is now a confirmation. We don't want to take the first, second entry short after new low, but since it is a confirmation, the lower high, we can trust that the bearish momentum is strong. Hopefully you can see why this momentum is too bearish, because from the top all the way to the bottom, we never really pull back to the EMA. It was too strong of a push all the way down, and this is the first confirmation of the EMA. So this is telling you that the bias is way too bearish, and this was pretty much the last trade for the day because it's getting too late. Today was not particularly easy day to trade. Very few setups prior to FOMC. You only pretty much had these two high probability setups, and then after FOMC it was too volatile and too fast, but you can still use price action rules to guide you exactly where you need to go. Okay, you don't need any indicator. All I can do is read the pure candles. If you can see, all these channels have breaks new extremes. If they resemble the clear two-legged pullback, even better, you expect pivot. And if the range is healthy, you buy low and you sell high. Okay, but the price action was so volatile, bars were so big that it was really hard to place an order. You can see you're still looking for decent high probability setup. This was potentially good short, or potentially this good long because it's a larger two-legged pullback. And then we had a change in momentum. The structure is too bearish. So clear trend range, but this is not uncommon after very strong downtrend because yesterday was extremely easy day. You can see this is what we had to trade yesterday. It cannot get any easier than this. So hopefully you capitalize on this beautiful structure because every single high probability setup at the EMA ended up being a winning trade. So you have to capitalize nicely during this day, and you have to be very selective and patient on a day like this. But today was FOMC, so these days are a lot of times very hard to trade just because it is very slow, and after that it is very volatile. So I hope you had a decent trading day. I'm going to wrap it up. I'm going to talk to you next time. Good luck with your trading.